Hello everyone. This is Ninja Trading and want to introduce you guys a hot SPAC today. 2020 is the hot market for SPAC. As everyone know, better get into SPACs right now. 2021 is going to be harder. This market is going to be huge. Okay, this one SPAC that I've been mentioned all the time to everyone. And today I want to make a videos to analyze it and make sure that everyone stay all the way to the end. I want to let you guys know how much potential this APXT would be after the merger. Stay tuned to the end. This is something that you really don't want to miss. And by the way, I'm not a financial advisor, and take your own risk on investing any stock that I've been recommending or I've been saying on our YouTube channel. And this is mainly entertaining purposes for everybody else. Okay, so APXT, I've been looking at it for 2 months, and I dive into it, so much potentials on this company. But as recently, so many specs out there is blowing up all the EVs and all the all those EV that been blowing up, flooding the market on the spec market. And APXT been slowing down, been hitting this hitting germs is gonna be blowing up on Q1 21. That's the time that they're gonna be merging. And I want to go do this investor presentation and go through it and let you guys know why I think this stock is gonna skyrocket after the merger. Okay, let's look into it and take a look at this. The first thing I look at the spec. First, very important thing to look at is the spec, executive team. Because after the merger or even during the merger, the operating companies always needed the support from the spec executive team. They need consultings. They had to have a strong, backgrounds and experience. So this APXT spec team has this guy Jeff, which is he had experience in banking and technology. Oracle CFO used to be, and this guy Brad have used to be from Goldman Sachs, and he served all those clients like Microsoft, eBay, and Yahoo, big guys, totally big guys. That give us a very good confidence if they pick a spec, that that has a value. Do you believe it or not? They're the guys already do all the research for you guys or for us. As a trader, as an investor, they already did all the research. If with all the experience that they have, and they are putting all this fund together, with all those, smart investors, if they're willing to put their money into this operation company called, Everpoint or whatever it is, there's gonna be a lot of values behind it. So let's dive into it, look into their financials, and look into what kind of service or product they serve. So this company actually a SaaS company, a Microsoft cloud database management company, mainly focused on the 360 Microsoft team, which is, as a pandemic going on right now, a lot of corporations use that, either use, Microsoft team, to do, online, Zooming and all that stuff, like Zoom doing the same thing. So this is, they pretty much providing the same service, but it's for, Microsoft 360. So you look at the summary transaction. So every spec presentation I look into is the first thing I need to look at. I need to know what type of valuation that that is putting out there. So this APXT merging with Everpoint have enterprise value of 9 times 2021 estimated revenue. Is it too high or is it too low? We're gonna look into it on the slides below, compared to their peers. So stay tuned all the way to the end, and I will explain that this is undervalue or or overvalue, and what's the price target we're gonna hit, after the merger. Also, their company itself have a lot of great, you know, executive team members have great experience from Goldman Sachs, Deloitte, Johnson and Johnson, and all those KPMG and all those companies are real big companies and well-known consulting firms. So they have a lot of experience backing up this company. So you look at the company overview, there are 1,300 employees globally. So it's a huge company, and also they have, global partnership of the year winners 5 times in a row. So what does that mean? This is a company that has already been around for a little bit. And, it's big enough, it's big enough. It's not a small company. It's not like a mom and pop that want to go public, right? This is something that actually, been out there for a while and actually, you know, have enough employees and operation size, right? The revenue already 148 million revenue. As a SPAC, that's great. They already have revenues and they already start generating revenue, which is a lot of SPAC that you see out there, like like Nikola or Fiskars and all those EV company that doesn't even have revenues, and when they blowing up to the merger, crazy valuations. But this one's already had revenue, guys. This is something that we gotta look at. This is generating cash flows. You know, the rate of return, what the ARR is 30% growth, pretty good, pretty good. But we gotta see a little bit more details, on the slides, like below a little bit. We gotta talk a little bit more in details. 14% EBITDA margin. This is crazy. This is crazy. You know, and all the specs out there we see, it's hard to find a EBITDA margin at 14%. This is getting me too excited right now, man. You look at Microsoft market share. It's crazy. Their cloud revenue is their cloud service revenue is at $48.4 billion. You know, this is ridiculous, crazy. You know, and APXT gonna do a lot of their service. Look at the market. Look at SaaS, and all those product they Microsoft to serve. You know, think about this. APXT gonna get a big chunk of it, right? You know what I mean? They're gonna serve them, right? So look at this. So as you guys know, APXT gonna be mainly serve Microsoft as this big client. So what they do, like Microsoft Cloud, offers Microsoft Word, Excel, and Microsoft Team. So APXT, what they do, you know, they provide this gap between Microsoft to the enterprise. So they make sure that the compliance, they make sure governance, they make sure everything works well, between their clients and Microsoft itself, right? So they provide this important service, right? So they do like manage and automate like automated end user service and cloud, you know, and they do asset management, internal, external sharing, governance, and they data retentions, record management. So they do a whole lot of services. They do a lot of services. So you look at this right here, you know, the advantage? Well, they have a lot of advantage. They pretty much fully benefit of, of Microsoft Cloud protecting and prioritize data and, as if, high IRO, ROI for organizations and all that stuff. So the main thing, this slide, I want you guys to know how big this company and how much potential that this company can, can have in the future. So you look at this, right? You look at 148 million revenue right now. Look at this little slight, you know, small little chunk of revenue they make as right now, but there's so much room to grow. This whole entire market had 1.8 trillion dollars by 2022. Okay, and you look at this right here. This is really, really catch my eyes right here, man. Look at this. Microsoft 360 user. At this point, they serve 250 million. By the future, they're gonna grow to 500. So they grow double, 500 million users. And and this is like, and their total share is 3%. And the future, they want to do 10% of that, right? So that's crazy. Like, think about this, right? This is how many percent of that? This is like, over 3% already for the growth, for the user basis and the shares, right? So you think about this definitely going to increase their revenues, like very, very crazy in the future. Think about this. Each company's valuation is very, very mainly driven by the revenue growth. Look at this slides right here. This is the customer. This is the customers that they have, on those blue chip space. They are Deloitte, they are Fidelity, they are, IAS, HPs, and PwCs, and you name it. They, all those big companies are here. They have Porsche, they have Siemens. They have a very good, big size, customers right here. Okay, this part's really important. Financials. So when you guys look at SPAC presentations, the first couple minutes, the first thing what you need to do is just dive into the financials and see what they have first, and then look at their wordings and all those fancy words talking about it, how what their service is. But the first thing I care about is the financials, right? Like the growth financials on on the revenues, right? So you look at this right here, very attracting, man, very attracting right here. You have the compounding annual growth rate at 38% on recurring revenue. What does that mean? That means like they are generating recurring revenues at the rate of 38% every single year. That's crazy. So those revenues pretty much guaranteed is recurring. And yet you had a growth rate of 30% on revenues, and year to year our ARR at high 20%. That is amazing. This is amazing. This is something that I want to look at. This is something that I want to invest into a SPAC. That's something that has the SPAC that has the growth potentials on revenues like that. Not something that I mean, definitely the one that with no revenues are gonna be a little bit more concerning on the long term. But something like this definitely could be a long term investing. It's not just a short term trade. You look at the revenue growth here, 30%, 33%. This is a real good growth rate for the revenues. Beside the revenue, you look at the EBITDA. The EBITDA is positive within like next year or so, right? Next year, I mean, even the year right now, 2020 is 14% EBITDA. That is so amazing. Like it's hard to find a company that that's not public yet to have EBITDA as positive. What's that mean that EBITDA is positive? That means that they're generating positive cash flow. That's something that you really look want to look into. So that way that you don't want to get into a company that have negative, like negative cash flows or negative EBITDAs, and they have to keep doing offerings after they went public, right? I mean, you want to be investing in a company that actually has revenues and has positive EBITDAs, so that way they have, they generating positive cash flows, and they can use their own cash flow to reinvest back into their operation instead of they go offerings or they go equity or that offerings right after the merger, you know what I mean? So the valuations at this point at the $10 share price is almost at 2 billion, right? And then 9 times of their revenue. Okay. So is it expensive or is it undervalued or overvalued? You will see on this slide right here. This slide tells you everything, right? This slide tell you if they are, because like, is it overvalued or undervalued based on, based on the revenue? Different industry is different, but the only way you can tell is to compare, this company to the peers, and see what they are, on and see what their percentage are, right? So, for example, APXT 9%. What's it? Not 9%. Like 9 times estimated revenue. Okay, and 2021, 2022 estimated revenue, right? 9 times. That's out. That gives them $2 billion valuations. You compare to like all their peers, 14, 11, 13. The highest is like almost 22 times. Yeah, 19 times. Yeah, 18 times. So this compared to this, compared to the high end one is like over two times. But also not just that, right? Also 32%, compounding annual growth rate on the revenue compared to all those their their competitions is all at the lower end of 20s. So what does that mean? Like this company definitely is undervalued. So based on this, based on 9 times of estimated revenues, if you times two, they give you like 18, right? They give you 18 times, times the revenue. So to get that gets you like $20 to get to somewhere around here. But that definitely is, this company is not only gonna work $20. This company actually gonna be way more than this, right? So we are at least gonna looking into a 30s or up to the merger. But also, I'm not a licensed financial advisor, but this is just all my own opinions. You invest on your own risk. And this is very interesting right here. You see this right here. This company listed, not this company, like the New York Stock Exchange and NASDAQ listed all those software companies that with only 5 companies have 10% or greater EBITDA. So APXT gonna be another one. So 25%, 10% that, okay, only 10% of that, only 10% of EBITDA margin. It's only 5 companies that's in in the stock exchange. 25% of that, the revenue grow. It's only 32 companies can meet that, which is just That's amazing. That's amazing. They are in one of those categories. You know, they are one that they can compare to one of those top guys. So what do you guys think? What do you guys think? In my in my honest opinion, this is, you know, is it overvalue or not? Let's look at their technical analysis. Right now, you see the fundamental analysis looking at the company overview and the financial numbers, and you know, at this price range of $15, still going to be undervalued. So this, after the merger, you're talking about 1 or 2 years, down the road, this company gonna be at least at $30 to $50, based on their financial, uh, based on their estimated revenue, and based on the market share that they're gonna have, and based on how fast they grow. But also, I'm not a financial advisor. Take your own risk on your investings. Okay, let's dive into their technical analysis. So as you guys can see that, right? Before all the SPAC before the merger is going to be like, consolidating around $10, consolidating around $10, right here. And once they had the definite agreements and they agree upon to go for the merger, they got a lot of excitement right here. One day it shot up to $19. That excitement showed us that so many investors or traders are very interested in this stock. Of course, all the SPAC doing the same, had the same pattern. After the first second days, excitement, they're gonna sell off, right? They're gonna take profit. So so that 2 days afterward, it's people taking profit, right? So it go back down to you know below $12, right? Below $12, and and up and down from 12 to 15, right? So recently all the SPAC goes up, so it go back down to like, it go back up to like almost $18. So what that tells you, like, that tells you the traders and investors are very exciting about these stocks, would not want to be missing this boat, right? So you can see that it almost tried to break this, previous high over here, but it sell off again. The sell off is not due to, it's not due to like, the company's not good. It's due to, it still have like 2-3 months for it to complete the merger. The merger is going to be, complete by, you know, um, Q1 2021, which is, we are looking at around like March or so, like around March. So we have 3 months, we have 2 or 3 months to go. So it's still going to be a lot of consolidations right here, consolidate, or it's still going to be a little bit up and down right here, right? But gets very close to the merger, it's gonna get excitement again, right? It's gonna get like the market gonna get excited again, right? So before the merger, well, you might gonna be seeing it's gonna go back up to like maybe 18 or so. After the merger or so, if the market truly believing it's overvalued, I believe it's gonna be breaking this new high right here, right? This $18 high is, it's gonna break that, right? Because that's gonna, that's gonna take it to public, and people are gonna be know more about this company. This is gonna be going to, going on the news or CNBC again, and everybody gonna know about it. Or, this company going public, it's gonna be more people know about it. It's gonna show up higher. But also on another hand, there's a lot of company that, after the merger from the SPAC, not too much love to it. It's gonna tank, right? But I believe on APXT is gonna break it's gonna break the previous high right here, right? So it's gonna break the $19, right? After the merger. That's my opinion. But in the long run, you know, but in the long run, this company has a lot of potential to meet to meet their expectations, to make their goal, to meet their, to meet their revenue, this company gonna go above $30 to $50, that range, if they can make the goal, right? So, but in the meantime, the management had to do their jobs and make sure that, they keep up with the forecast numbers and, but from what I see today, this, this spec had a lot of potential, and also I'm not a financial advisor, so, this is my personal opinions only, and it's for entertainment, everybody's out there that's interested in spec, but I truly believe in this one. It has a lot of, value for either the short-term or long-term trade, but keep your eyes close to it. And thank you for watching my channel, and also please like and subscribe my channel, and thanks for the support. I will put more specs out there, coming up soon, and please leave your comments below, and that helps me to to do a better video next time. Thank you guys.